Welcome to the Just Word Podcast. I'm Pat Bolland. The Just Word Podcast is brought to you by Justwealth, investing the way it should be, just for you. In the investment world, socially responsible investing seems to be a buzzword, and people are talking about it in terms of what they call ESG. But what exactly is ESG? We're going to find out. Adelaide Chiu is going to join us. She's VP Head of Responsible Investing and ESG Services at NEI Investments and on the board of directors of the Responsible Investment Association. Adelaide, welcome to 2023. And as we head into 2023, responsible investing is a buzzword. So you got a big year ahead of you. You're looking forward to it.
I definitely am. It seems that it is a big year ahead, but it's been like that for a number of years now. Excited.
No kidding. Well, okay, let's start with the basics. What is ESG?
Yeah, so ESG itself is actually environmental, social, and governance. And those refer to factors that are being considered within an investment process. Literally, that's what it is, the factors that should be considered when you're making an investment decision.
Okay, so if environment and social and governance are the buzzwords right now, how long has it actually been around, or is it kind of a fad?
Yeah, no, ESG is a relatively new definition or term itself. It really does stem back as to what you had mentioned, socially responsible investing, SRI. And so that's been around for centuries. If we think about sort of the faith-based investing where they excluded certain industries such as tobacco or gambling, that those would have been called the sin stocks back then. So it's been around for many years. And really, if I were to think of a year, 1970s or so, you started to see investment funds come out, which were more faith-based and ethical funds, where they excluded industries entirely due to the exposure to certain industries. That has now evolved. And so if we fast forward a little bit to the 80s and 90s, there was a lot of academic research that came about to show that responsible investing supported returns and didn't actually detract from returns as you were excluding certain industries from sort of your investment universe. And then as we move on to the 2000s, it really became part of the investment process. There was a lot of risks that were highlighted. Some of us may think about like when Erin Brockovich had her when she came
out. The movie, yes, okay.
We had the movie and everything, right, showing you environmental risks and litigations, and it was real. And so that was when society as a whole started to understand some of what the risks were, and maybe how companies may have not been behaving well enough, and financials weren't really capturing that risk. And so that's really where you start to see that evolution into where we are today, where it's not just environmental issues or risks, it's social as well as governance. And you really do see that evolve. And today you're seeing more focused investments such as impact investing. So that's the evolution, the timeline.
Wow, there. Impact investing. So we'll get to that in a second, but I want to talk about the ES and Gs. Is there one of those elements, those components that you look at that's more important than the others?
I wouldn't say that there's one that's more important than the other. It's really dependent on the company that you're looking at and the sector or industry the company sits in. So, for example, a bank may not have an environmental footprint that would be as risky or known as, say, an energy company, which would be exploring for oil reserves and such. So,
right.
So that obviously will be a much harsher environmental risk. But that's not to say that there aren't governance issues that could be at both companies or in both industries. So it really is coming from a holistic approach and understanding the industry and the company that you're looking at.
Okay. And then impact investing is interesting, at least as far as I'm concerned, because your money is at work when you invest in a corporation. How popular is impact investing right now, in that, you've got a whole new generation that's coming up and saying, I want change?
Yeah, so impact investing really did come about in around 2010 or so, and you're definitely seeing more of a desire for that. And impact investing is, you are looking for financial returns, but at the same time, you have the intention. There's intentionality on having a measurable positive change from a social or environmental aspect. So there's an intentionality of actually striving for that positive change from a social and environmental standpoint, as well as achieving a financial return.
Okay, so then how do you quantify any of those standards, whether they're E, S, and include impact investing in the S, I suppose, and G, governance? How do are there standards?
Yeah, so there isn't one global standard or set of standards today, as there are, say, with financial statements that are following, whether or not it's an international standard such as IFRS, or in the US they use GAAP. So there isn't a body that sort of
But those are
regulates.
accounting standards.
Those are accounting standards, and those
Right.
are what you would see in your typical financial statements, knowing that it's been audited and you can have confidence in the numbers. So there isn't anything like that today that has been globally adopted. There are regional standards that are voluntary in nature, but the UK and the EU are moving towards codifying. So they have their own set of standards right now that many of the investment companies need to abide by. And so that's really coming about in the past few years. Whereas North America, is trying to, adopt their own standards, but, nothing's really been, it's all voluntary today. So from a global perspective, there is a body out there that is part of IFRS, that global standard that we had just talked about. And it's the International Sustainability Standards Board, ISSB. And what they are trying to do is really, deliver international standards, global standards that companies can follow. So that you're able to compare, company A to company B globally, and it's apples to apples versus, apples to oranges. And so that is coming about today.
I thought the United Nations had kind of weighed into this with their UNPRI, Principles of Responsible Investing. Is that not the case?
No. So UNPRI, the UN Principles of Responsible Investing, did come about. And I believe it was 2006 or so. And that really followed the steps of the United Nations Environment Program, and that came in 2005, which really came about with all of the awareness that we had just spoken about, with environmental litigation and all of that. So that really did come about then. And the UNPRI, they've set out a framework. So it really is a framework where companies can sign up and ensure that their assets are being thought of from a responsible investment perspective. The standards are, they're much more, there's more guidance there on how you report versus a framework. And so that's what is being come about. So UNPRI definitely is being used as an umbrella to sort of follow and have that guidance, but the standards will be over time codified from a global perspective.
Right. So they give the direction, not necessarily on a quantitative basis. I get it. Okay. So then you're a portfolio manager. Where do you start when you approach ESG? What do you look at first? Or do you look at the company first and then say, hey, maybe I better check the backstory?
Yeah, I mean, it's no different from how you would look at a company from purely a financial investment perspective. You look at the company, you understand their business model and in the industry that they operate in. And with responsible investing, it actually takes into account more factors that may not be necessarily obvious today, only because most of the information that's disclosed today are financial and quantitative in nature. Whereas when you start factoring in ESG factors or responsible investing from a responsible investing lens, it does become a little bit more qualitative. So how do you translate qualitative attributes into a quantitative attributes? And that really just comes with understanding the industry, understanding the risks, and then, how it could impact your company, the business model, your revenues, your cash flows. So it's no different from that perspective, but it is, another way of looking at it. It's basically looking at risks today that people may not have looked at holistically in the past. And so you are having more of that focus. An example would be employee turnover, right? So we all know that if you're a company that relies on its people and that labor force is turning over or leaving, that's a risk. And so that's an easier one to quantify because you can get a turnover rate and you can see how much you're losing in training, but it wouldn't have been thought of before to the same extent today.
Good point. So intuitively, I would think it would help your investing, but does it?
I would say it definitely does because it identifies risks that may not have been considered until those risks show up. So again, with thinking about what your investment is worth, you really have to think forward and ahead and future and how it can impact your cash flows. And so with responsible investing, you are thinking ahead, but you're taking a much more holistic approach, and it's risks and factors that may have been an externality, and now we're trying to take it more holistically into a company's valuation and into an investment decision.
Okay, so if that's the case, why is it so controversial in the United States? Because you've got all kinds of state-run pension boards that are accusing ESG investing as hurting their returns. And especially, for instance, right now in Texas, they're making a thing of it. And it's, Democrat versus Republican. It's very political. Why, if intuitively it does help over the long run, would the pension plans be doing that?
Well, I think there's definitely a lot more media that's focused on responsible investing and ESG. And so because of that attention, I think you're going to attract a lot of, whether or not it's politicians or policymakers, governments, to this, because it is becoming important. And I think the people, society itself, and investors really in the end are also starting to acknowledge this. And so with everything, there's always two sides to an argument. And that will never go away. And with the responsible investing, it is much more of a longer term perspective, whereas other individuals may have a shorter term perspective or timeline. And so it's matching up timelines sometimes in terms of your expected returns and what you're looking for. And then the other big part of it, I think, is just it's education and learning and really understanding what it is that responsible investing is. And it's not an easy subject really to understand unless you've been either immersed or practicing it for a long time. It's like with anything that's new to the market. It's just really trying to get your head around understanding how it can help you.
Okay, so are we ahead of the United States or behind in Canada in terms of this approach and not the popularity, but the utilization of responsible investing?
Well, I think like Canadians, we do try to understand different perspectives and different ways of incorporating, how we should think of, things that may have existed. And so I think we're a little bit more open-minded from that standpoint. Not to say that, whether or not we're ahead or behind any one nation or country or another. It's just, I think we have more of an ear to understand, and we know that it is important. And whether or not it's our government system, the political system, it all defines in the end like how the progress will be made. But you are getting a lot of support from society, and whether or not it takes 5 years or 10 years to get adopted into policy, it is going that way. At least that's my perspective. I do think we are headed to incorporating more of these social and environmental and governance factors into the investment decision. But, I mean, if I were just to think about it, Europe is ahead because they've actually codified it and they've put it into regulation. The US is also doing that. The SEC is also looking at that in terms of some of their disclosure, and Canada as well. So, it's relative, I suppose.
Okay, so you'd like to see more legislation surrounding that?
I think it helps for sure, because then there's no questioning on how it can be adopted, how it should be implemented, and there's certainty. And I think with responsible investing, the gap we have today is really that disclosure requirement on how things and how information should be disclosed. And so if it helps, yeah, definitely I would like to see us move towards that. And we are. It's we're constantly having discussions with regulators and policymakers to really advance this.
Adelaide, where can somebody go to find out more about ESG and responsible investing?
Am I allowed to say the NEI website?
Sure.
Definitely, you can take a look at our website. But there are definitely many different resources that you can look to.
Adelaide, thanks so much for explaining ESG to us, and appreciate your time.
Thank you. It was a pleasure, Pat.
Adelaide Chiu, NEI Investments.